Good morning, traders. This is Wilkey with StartupTrading.com. It is 8:39 a.m. Eastern Time on Tuesday, August 4th, 2020. So looking real quick at yesterday's session, we had basically a gap and hold. The Russell had a little bit more of a gap and go, but if you look at the ES, the NASDAQ, and the Dow, they pretty much just, you know, had an overnight gap, traded up a little bit more, and then went sideways the rest of the day. The Russell relatively had more strength than the other three. Just looking at the price action, it actually moved down from the open, right? Then moved up later, then consolidated, it moved up higher again. Where the rest of the indices were really just, uh, the hold, just chop sideways in a small narrow range. Looking at it from the overnight perspective, you can see, falling into value in the overnight session for and this is the overnight value areas for the Russell, and then, when it broke out, it just held above. So all for the indices, printed prices above the both the daily and the overnight ranges, which is, a little bit more bullish. But if we look back at really, I think the Dow is the one to pay attention to. And I'll see if I captured it on this grid. There was some double distributions, and I mentioned this yesterday in the morning that the Dow would be a little bit more of a key than normally for the day, but unable to get back up above that 26,718, and it didn't even get into the 26,642. It couldn't get above that level and into that raceway. It still never breached this and got up into this level since it traded, 2 Thursdays ago now. So looking at the overnight action that we've got so far, 26.75 points, and what we've had is a rotation, right, underneath where all these traders were. So if we look at, basically the gap and hold yesterday was all in this area, and what we've done now is we've went under it, and as we've slid under this area, right, this is a classic bull trap, right? We've consolidated sideways, and then we've just, run under them. So today is actually the bears' day to lose because they have the bulls trapped above modestly, right? Just one day's worth of action, nothing too severe, but there are also bears trapped in this area of the chart, right, from the last couple days, right, from last Thursday and Friday and Sunday night down in here. So, and if you look at the level 4s that we're watching, each day, the range for the level 4s is 32.50 half up to 33.26 half. So that should be, the expected range for the day, which is still small because yesterday's range was so small. So getting back down to around this level of the 32.50, unless this is going to be one of those 7 days a year, which you should not expect, that we're going to get things aggressively going underneath this. What I would look for is potentially, if we don't get a push up right off the open between 9:30 and 10:15, after a little bit of a shake and bake there, I would look for the move down into the euro close, so about 11:30 a.m. Eastern time, a little bit of consolidation, and just it could end up still closing below yesterday's range, but I wouldn't look for continuation lower in the afternoon. So looking back at all the indexes and really seeing how they fared back in the overnight session, I guess we'll start with sequencing first. So looking at the sequencing, we can see that, this is on the left side of this is yesterday's action. On the right side is today's, session start. Looking at micro draw since the session started last night, we can see that the bulls, started off trying to get something going. They come up. They actually hit a target at 32.97.75. That was the high tick of the overnight, and then it just went down after that. right, for them. They come back up. They tried to hold another sequence. They lost it. They went down. They're trying to hold another little sequence now. But if you look at for the bears, since they hit this high, right, coming down, they haven't looked under this 38.2, or they haven't got back above this 38.2. So it's been a little bit more aggressive to the downside, modestly speaking. Looking at the NASDAQ, similar picture, right? Holding that 38.2 short on the micro draw. Looking at the Russell, holding the 38.2 short on the micro draw. You're getting the sequence here. They're all on this 38.2 short from a session. So watching above that is really going to be key. And then as we look at really the overnight value areas, we can see, except for the Russell, right? The Russell is still up in value. So we can see where yesterday's low was for everything, this green dashed line. We can see where value area low is, these double green solid lines here. So everything is below value area low or in value area low, except for the Russell, which is holding. And we said it had relative strength yesterday based on price action. So watching the Russell is going to be key to watching the rest of these indices this morning, right? They're not going to be able to go down aggressively if the Russell doesn't start losing value area low. So you do have some bears, over. Remember I said we got that small range today as we go back and forth. So as we look at those small ranges, we can see, it's going to be the battle of who wins the little, squeeze going on. And we could just rotate back and forth against this tiny range as far as what we've had in the last few days on those level 4s that I spoke about. So again, looking at the ES, we could trade, basically, anywhere all the way down to 32.50, I think, and really 32.60 would be more like it, if you ask me. And then all the way up to, basically 33.16 would not surprise me before the bell rang. So I would play more of a range, and I would not expect for total trend to stay in control today. I'm going to look at the Russell now. The Russell holding above 1496.30 is going to be a little bit more key to watching some lines in the sand. You get basically below 1495. I think that just opens up this down to 1490, and you'll have to watch 1490 because then it just gets in the larger distribution of this node. So all the way down to 1490, the Russell should have some relative support, and it's going to be difficult, in my opinion, for it to get any traction since it is a stronger indice. Getting back below 1490 is going to be more of a signal, and that's what the bears are going to want to see for a continuation of the downside. Looking at the Dow, right, this 26,510 level is going to be key for it. And, with this, you can probably add 40 points plus or minus. Don't you look at it as a fine line on the sand. You're looking for an area of defense. You can see how these highs down here, went all the way down to 400. So basically there's a 100 points range of soft support down here. And then, breaking back above, you're probably going to start getting into resistance right around the point of control for the time period I'm looking at, which is right around 26,703. So again, I think you're playing more of ranges, 150 down, maybe 200 up from where we are. And that's going to be basically it. I don't think it's going to get any more traction in any direction other than that. So I just want to put a little wrap on this and give you those closing thoughts. But keep in mind, we're unlikely to get anything down below. If you see basically 32.40 anything print, you should start really looking to strongly exit your short positions and either flip or just go out for the day. This should be the bottom of the range. And if we do make progress down there, getting a close below 32.40 is going to be a chance of probably like 1.5% on the day. It's going to be an extremely low probability trade that they're going to get continuation into the close, and there'll probably be, if we do start printing, suppose we go down in the morning, I'll even draw this on here. Suppose we, take a leg down, take another leg down, we start consolidating, until 2 o'clock, there's likely to be a rip your face off rally into the close that takes it all the way back up. It would be unlikely for us to close below this level, even if you start trading below it. I hope this helps. And just watch these pattern recognitions. And again, you got bears trapped from Thursday and Friday of last week and Sunday night's initial open down below us, and you got bulls trapped above. There's going to be a little bit of ping pong, I think, back and forth between the bulls trapped yesterday above us and the bears trapped below from the late last week. You guys have a great day. If you like this technical analysis, give this video a thumbs up.